Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. We make money as real estate investors when people pay us rent to do something with our property. But it's not always what you think. Today we're going to talk about some of our favorite tenants in the world, boxes, as we discuss self-storage as a real estate investment on the Real Estate Guys radio program.
Hi, I'm Brad Sumrock. At this year's AIM-NatCon, you'll find out why apartments have been and continue to be the hottest sector for real estate investing, and why more and more people are moving their money out of Wall Street into real estate, specifically apartment buildings. Plus, with the new tax laws, learn how owning and investing in apartments are even more attractive right now in 2019. Learn from some of the best speakers and investors in the country. Gain access to industry experts and service providers from all over the USA that can help you earn more money and pay less taxes. Meet and network with hundreds of other apartment investors and other like-minded individuals. So whether you are new to investing or already an experienced apartment owner that wants to go bigger and faster, this conference is definitely for you. I'll see you there.
Join Robert Kiyosaki, Harry Dent, Tom Wheelwright, the Apartment King, Brad Sumrock, and the Real Estate Guys at the second annual Apartment Investor Mastery National Conference. It takes place Saturday, August 10th in Dallas, Texas. For all the details, send an email to AIMNatCon, that's AIMNatCon at realestateguysradio.com. AIMNatCon at realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, financial strategist co-host Russell Gray.
Hey, Robert.
There's so many different ways to invest in real estate. And I'll tell you, when we first started the show many moons ago, 22 years ago, we thought that, about 2, maybe 3 years at most, we would have covered everything there is to talk about real estate, and there'd be no need to do additional shows. And here we are, 2 decades later, in our third decade, and there's still so much to talk about when it comes to real estate.
Yeah, I feel like if we had time, we could do a show every day. I mean, there's just so many different things out there. People are so creative in the ways they find to make money with real estate.
Yeah, it's fascinating stuff. And the typical real estate investment is a single family house. Maybe it's in a rental neighborhood, and there's a lot of folks there that are in single-family homes. And, it's easy to understand. Most of us grew up in a single-family home or knew people that had single-family houses. And, my mentor, Jim Rohn, used to say that kids should have 2 bikes, one to ride and one to rent. And probably folks ought to have 2 houses, one to live in and one to rent. And it seems pretty simple. But there's so much more than that. And today on the program, we want to talk about kind of a cool niche, which is the niche of self-storage, where people can find a place other than their home or their own property to store stuff. Now, everybody's familiar with the concept. Maybe you've got a self-storage unit somewhere, or you've had one for a period of time. And this is one of those real estate uses that is kind of unique in that at various times in a person's life or a business's life cycle, they just have too much stuff and it's got to go somewhere else.
Yeah, I really became familiar with this whole concept when I was in the office products business, especially on the furniture side of things. When I would go out and help people with their space planning, and we would talk about utilizing space and making the argument for why people would want to spend more money for a 4 or 5 drawer cabinet, lateral file cabinet, versus a 2 drawer. And it was because you were able to take up some vertical space. The other part of it was on the document storage side, companies would store their documents off-site because it made no economic sense as a business to pay premium office space in downtown San Francisco or Silicon Valley or New York or wherever. And you might be paying $2 or $3 or $4 a square foot or more per month, $20, $40 a year per square foot per year to store stuff. And so they would rent inexpensive spaces to store items off-site. Well, if you really think about it, that's really all self-storage is, because when you rent a space to live in, you are looking for a place to relax, to cook your meals, to sleep, to do whatever it is you do at home. And really, the stuff that you want to store could be stored a lot less expensively nearby in a place that has a lot less amenities. So, as a consumer, self-storage makes a lot of economic sense, and especially more so when times get tough, when you're looking to downsize your living space and you need to be very judicious about your monthly budget, but you still want to hold on to all your stuff. Self-storage makes a lot of sense.
Part of the reason it makes sense is because people are sentimentalists. minimalists. They hang on to stuff longer than they probably should. Anyone that's moved more than a couple of times knows that you accumulate stuff and you think, gosh, well, where was this all the time I lived in the house? Or why do I still have this? And it gives us that spring cleaning opportunity to kind of weed our stuff down. But a lot of folks like to hang on to stuff just in case. And this can be great for folks that want to be in the self-storage business. And there's lots of levels of this. It's as simple as owning a small property where you can lease out spaces to folks who want to store stuff, like there's specialty self-storage, like for boats and RVs and those kinds of things. There's climate-controlled self-storage, which we'll talk a little bit about today. There's just bulk storage. You talk about records, business records, that's a whole subset. I remember you and I were looking at a deal many years ago that we almost did and didn't. We were shown an opportunity to purchase a old high-rise tower that had been built in the 60s, and it was vacant, absolutely vacant. It just happened to be in the exact center target of the CBD, the Central Business District of a top 10 city. And it had some problems. It was functionally obsolete. And the biggest problem, besides the asbestos and the bad plumbing and that stuff, the biggest problem was this multi-story building had zero parking, no underground parking at all. Makes it really difficult for office or retail or residential. But the need you talked about was the one we identified. Of all the things we could do, we talked about making it into a parking garage, and that's super expensive. And we talked about all the different ways you might be able to figure out parking with adjacent buildings. And we talked to a big valet parking company in the area. But at the end of the day, what made sense, because it had good bones and elevators and all that, was document storage close to downtown. We never did that deal for a variety of reasons, but I always think of that when we think about self-storage, because people will pay money to store their stuff somewhere. And the importance of the stuff is in the eye of the beholder. Some of the things people store, you're thinking, well, what in the world would you do with that? Well, that doesn't matter. As long as they'll pay to do it, it can be attractive to you.
Yeah, I think most people listening probably have a storage unit or have had a storage unit. I think they understand the mentality behind the types of people that do it, because it's all of us. I've had a variety of them over the years. I mean, cars and boats and, boxes and all, furniture, transitional stuff when I'm in between places, downsizing, upsizing, storing the kids' stuff, just on and on and on and on. But I think the other thing, just looking at it from an investor standpoint, is I've never seen a toilet in a self-storage facility. And so there's certain responsibilities that you have as a landlord when somebody is actually residing in a property or conducting business in a property that you really don't have when all you're doing is storing their stuff. You have some security issues and maybe some climate control issues. You obviously have to provide access, sometimes at weird hours. There's some support things you have to do. But really, when you look at it from a business model standpoint, it's really pretty simple.
That is a great point. And the simpler, the better sometimes when it comes to real estate investing. Our good friend Dave Zook is going to be with us today. He is a successful business owner who started in the syndication business just a few years back, and he often speaks for us at the Secrets of Successful Syndication because he has raised over $100 million doing all kinds of different real estate, including self-storage, and he's got a lot of story to tell when it comes to this space. When we come back, we'll head to Lancaster, Pennsylvania, and meet Dave Zook on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 45th year, it's the nation's longest-running investment conference and features some of the biggest names in economics and investing, including Doug Casey, Dennis Gartman, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting a hospitality suite one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. For all the details, send an email to neworleans@realestateguysradio.com and it will tell you how to get upgraded tickets and join the party. That's neworleans@realestateguysradio.com. And we'll see you in New Orleans.
Hello, Robert Kiyosaki. Listen to the Real Estate Guys. They're wild and crazy, but they really know what they're talking about.
Welcome back to the Real Estate Guys radio program. I'm your host, Robert Helms, and we're super excited to welcome back to the radio show the $100 million man, Dave Zook. How are you, Dave?
I'm doing great. Thanks for having me back on the show, Robert.
Well, it's always good to have you. It's been great to watch you blossom and continue to help investors find great opportunities. And you're getting out and you're speaking, man. It's awesome. Like we were at an event today with Michael and Jerry, good friends of ours, and you introduced us to Michael and Jerry. They had me come and speak at the event. You come and speak at the event, and your talk was awesome today. Loved it.
Thank you. Well, I tried to pick up tips, and I've been around you, and I've watched you, and at first it's really scary, but it's gotten better. It's gotten easier, and it's also a lot of fun just getting out there, educating, and I love coming out to events like this just to learn.
Yeah.
You had 250 guests here and business owners, entrepreneurs, and just being able to get in the presence of folks like that, I always learn a lot.
And so much variety in what people are doing. In fact, we always look at different real estate classes, and you're a guy that raises money to do all kinds of deals, lots of real estate. So multifamily, residential real estate, resort properties, but you also have done some niches over the years, like the automated teller machines, ATMs, which is fascinating. And we had you on the show last year, I think, talking about a really interesting niche, one that's been intriguing to me for a long time. That's self-storage.
Self-storage, I first got interested in self-storage back 20 years ago when I delivered modular buildings from our family business down to a dealer of ours who had a self-storage business. And I would ask him questions about how this works. And he told me, he said, look, this is the easiest way to make money ever. And so I always had that in the back of my mind. I mean, this has been 20 years and I really, I was busy running businesses and then I was busy, in the multifamily space, and I never really got introduced or never really had an entry point to do business with a really great team until a few years ago. And I got introduced to this team by several folks in my network and who had done a total of 11 deals with these guys and couldn't say enough of good things about them. So we went out and we got involved. I brought them up to Lancaster, and my team, who happened to be, one of the guys happens to be the National Self-Storage Association chairman of the board or was, and he interrogated the guys and they end up knowing a lot of the same people. And so we did some deals with them. We did a total of 4 different deals with them, and it's just been a good experience. And they've performed or outperformed every one of the deals we've done with them so far.
Awesome. Well, it may seem obvious. People understand self-storage. People store stuff for some period of time, but let's dig into it a little bit, because in many cases, people that are in some sort of transition, they sell their house, they're moving into a smaller house, it hasn't closed yet, they need a self-storage unit for a couple months. But lots of folks end up keeping their self-storage unit for a long time. Who are the customers for self-storage? Who are your tenants?
So if you think about somebody that lives in an apartment, and we've seen sort of a flow of people heading into the apartment space where, that's becoming more popular to live in an apartment. Well, you think about a 2-bedroom apartment, you don't have a room for a lot of stuff.
That's
and
true.
These guys, me being in a storage shed business, we're in a modular building business. That's a family business of ours. So these guys don't have room in their backyards to put a storage shed back there. And so apartment renters, specifically in the A and B class, maybe where they've got a little discretionary income and they've got stuff that they need to store. That's a great tenant.
I have personally had a self-storage unit It's not been the same one, but as I moved around for probably 25 years. So I'm a tenant and it's a great service. I always look for a place where, my stuff's going to be safe. And a lot of these places are, guard gated and secure. And sometimes they're climate controlled and all that. But I do think it seems to me at least, and maybe we can check this, that there's a lot of folks who intend to use it short term and kind of end up keeping it.
The pain from the monthly fee isn't great enough to spur the action to move the stuff out many times. And so, yeah, you're right. I mean, somebody will move in thinking they're only going to be there for 3 to 6 months and end up being a tenant for 3 to 6 years.
Now, a lot of our listeners obviously understand rental property and the idea that someone's going to pay to rent your space. Same thing here. But tenant-landlord law is a lot different.
When you're dealing with boxes instead of dealing with people, everything changes and it becomes becomes a lot easier.
Yeah.
And again, the government isn't as concerned about how our boxes get treated as how people get treated, the voters get treated. So, I mean, there's just a lot less there to worry about.
That's going to be a new Dave's quote. Boxes don't vote. Yeah. So, but here's one of the downsides, I think, is I know I found this. I was intrigued by self-storage. We had a couple that came on our investor summit way back when we were still doing the renewals of real estate licenses for people. And they both had licenses and they were renewing their license. And we got visiting with them at dinner one night, and they didn't really practice real estate anymore, but they just wanted to keep their licenses current, but they were in their mid-40s. I'm like, well, what do you guys do? Well, we're pretty much retired from 3 of our properties. I'm like, well, this is a story I want to hear. Tell me about your properties. What kind of properties? All self-storage. 3 self-storage complexes. And the big challenge for them was the first one because they tend to be bigger. You don't see too many. These exist, but you don't see too many, small self-storage places that a single investor might be able to buy. Talk about the size of your typical install.
Normally, we'll go after something that is, 400 to 500 units or larger. What our team has been really good at is taking a mom and pop investor product, maybe 400 or 500 units, and adding several hundred climate-controlled units to that asset and getting it to the point where it now becomes an institutional target. When we can get in at, say, a 6.5 cap and sell to an institution at a 4.5 cap, that's a nice little spread.
That's awesome.
And so by being able to go in there, take a mom-and-pop asset and turn it into an institutional target where you can sell to a REIT, and our team has really good connections with the REITs, and we've sold a lot of product to the REITs. In fact, just in the last half year, they've sold 2 products to REITs, and that was about it, a 4.5 cap on the exit.
Yeah. Well, it's interesting. Everybody plays a role in the food chain. And one of the things about this is you think, well, why wouldn't the REITs buy that underperforming property? Because that's not their charter. They want the fat cow. They want it finished. They want to buy a property that throws off a consistent income. When you can come in and take an operator that's done the best they can in the marketplace and has some market share, but hasn't fully exploited the use of the land, so you can either add more units, retrofit units, or add climate control, which we can talk about in a minute, then you've increase the value. Like in any real estate, if I increase the rent, I increase the value of the property. In this case, you have the typical things you have in residential, occupancy and rate that are going to figure into your income. Let's talk about those. What does occupancy look like in a typical self-storage facility?
Stabilized assets is considered to be somewhere in the 80 to 85% range. Okay. And typically, I mean, you've got different sizes. You've got climate controlled, you got non-climate controlled. So if you're on 100% occupancy, that's not necessarily a good thing. That means your rent's not high enough. So you're in the 85% occupancy range. You're doing really well in the self-storage space.
Now, the climate control is, certainly something to consider. I guess part of that's going to depend on the climate where the unit is, but there are people that want to have stuff that is preserved better. What kind of a premium does someone pay for climate controlled, and how climate controlled is it?
So climate controlled, yeah. I mean, we've set our, it's an interior building, obviously. It's interior unit, and you can probably bet on a 20 to 30%, maybe even a 40% increase, depending on where you are in the country. We do a lot of business in the Southeast, so obviously it gets warm down in we have a lot of our projects are in Florida, and so every one of our projects that we've done together with this team is a project where we've actually went in and added square footage We bought 75,000 square foot facility and we added 50,000 square feet to it. And so when you get in there and you've got a project that you buy in that's stabilized, you really go in and unstabilize it. I mean, you really go in and add a bunch of square footage, and then you go into the lease up period. Yeah, yep. You got your lease up period. So really being able to go in there and force the value. Of course, you get some market appreciation if you buy in the right areas, but if you go in and force the value, that's what they've really been good at doing.
Yeah. Well, it seems like there is always demand for this product. When times are good, there's demand for this product. When times are bad, let's talk about that kind of the counter-cycle nature of this investment.
So historically, self-storage has been a very recession-resistant asset class. This asset class does really good when there's disruption of any kind. If you look back to 2008, 2009, 10, I mean, this was an asset class. In the commercial real estate space, this asset class outperformed any other commercial real estate asset class. So when you look back historically and see how it's performed when times were bad, that gives you some kind of some comfort. We talked about, you and I were on a panel this afternoon. We talked about, where are we in the cycle? Right. And if you think we're high in the cycle where we're due for a recession and we're due for some kind of a cool down, slow down, whatever, self-storage might be a good asset class to be in for the next couple of years.
Well, think about it, right? If I have to move for whatever reason, I lose my job, I get downsized, whatever it is, I don't want to get rid of my stuff. I'm going to put it in storage for a couple months or a couple years or whatever it may be, or I get relocated to another country. That's just happened to a good friend of mine, and he's like, you know what? I'm not going to sell everything because I don't know how long I'm going to be gone, so I'll store it for a couple of years. When we see disruption in the marketplace, whatever the reason is, this is one of the needs that comes up. And relatively speaking, it's inexpensive space. It's not like renting a house or even renting a commercial building. But for the dollar per square foot, because of how much stuff you could put in one of these storage units, it can make sense. And the buildings aren't all that fancy.
You're right. And it is inexpensive. And that's another point, because we get away with rent increases to the percentage where you wouldn't be able to do that in, say, a multifamily apartment building.
Yeah.
So, you're talking 6% per year, 6 to 8% per year in rental increase. Now you look at 6 to 8% per year, and that sounds like a lot, but if you're taking 6 to 8% a year over, let's say, $100, that's $6 or $8.
Right.
And so the pain isn't great enough. Again, the pain isn't great enough to make you go out there in the hot summer and put all your stuff in the back of your truck and move it somewhere else. You look at that, and then you looked at the cost, and you looked at what are those assets that you're storing. If folks who were storing their stuff in these cubicles, in these storage spaces, were to add up the value of the stuff that they're storing and do the math, a lot of times the stuff that they're storing isn't, you look at it over a 12-month period, the stuff that they're storing isn't worth the rent that they're paying, but, we don't advertise that. We don't talk them out of it.
Oh, that's such a good point. I remember last time we moved, we moved across the country, so we got charged by the pound. And then you're thinking, well, I guess that's a fair way. They're going to move a whole bunch of stuff. It's going to be charged by the pound. So now we're deciding, what are we taking? What are we not taking? It's like, is that worth the price per pound? How much does that weigh? Right. What's it going to cost? We could buy a new one, right? We don't just need this stuff. We need some stuff. And so it's a good point. But there's also emotional attachment, right? Like you watch these TV shows where these guys go, buy these units that are the contents of the units, because you say someone doesn't pay and you can't contact them. You've got whatever remedy and you sell the stuff sight unseen, and there's all those. So that's probably spurs on excitement for this business as well.
Yeah, and typically people aren't storing their Ferrari in a 10 by 20 unit. I mean, this is, some of the stuff that they're storing is, you got to wonder, like, wow, they're storing that, but hey, sometimes it has sentimental value and they can't get rid of it for whatever reason.
Yeah. So let's talk about kind of the size and scope of a property. Typical property you're talking about, you come in, it's not ground up construction, someone's already operating it, but part of your plan is to go in and your team makes the assessment of, is there room to add units? And that's a process, and that takes some time. Stabilization you talked about, it's a stabilized asset. All of a sudden now there's the same occupancy divided over more units, so you've got time to get back up to market. What's that time period look like to take a mom and pop unit and turn it into something that's attractive to a REIT?
So typically, roughly around 12 months, we bought an asset just over a year ago, and I just got word that we're totally finished. The on-site manager has moved into the apartment that we built for him. We're in lease up. So that was just about 12 months, just over 12 months ago.
Okay.
So typically we can get in, depending on the market, depending on the permitting and the time that it takes to get the permits and all that stuff. But typically we can go in, and 12 months later we'll have our certificate of occupancy and we're in lease up.
Now, these are deals that you syndicate, so you raise capital to do this. How much capital generally is required? I know every deal is going to be a little different, but are these large raises? What does that look like? And maybe minimums for people to invest?
Yeah, so the last number of deals that we've done with them have been individual deals, and we've teamed up with Reliant, and we love those guys. They've got a very deep team. They've been great to work with. Again, they've performed or outperformed any of their projections that we've done. But up until this point, we've only done single assets. So we'd go in and we'd buy an asset and we'd raise the money for that specific asset.
Yep.
This time around, it's a little different. We're doing our first fund.
Okay.
And this fund is going to have 8 to 10 properties in it. They're already identified. We've got all the due diligence on them. You've got the whole package of due diligence that the team has done. And so this time it's a fund. It's 8 to 10 properties, and it's about $35 million equity raise.
Wow. Now, what is the long-term play? Is this to hold for production of income, or is the plan to look for a suitor? What's that look like?
So it's projected to be a 6-year hold.
Okay.
But that's what the pro forma says. We have seen this team actually do quite a lot better than that. The ultimate goal is to buy it, to add value to it, get it stabilized, and sell it to a REIT. We projected 6 years.
Okay.
Their average hold time on the last 21 deals was 3.6 years, I believe.
Okay.
So that turnaround time has compacted, so it's not, typically they're not holding all their projects for 6 years.
Yeah.
But that's the pro forma. We expect it to turn quicker.
All right, good stuff. We're talking with Dave Zook about self-storage, and is there an opportunity in that space? We'll have more when we come back, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A+ rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com. Are you looking to create sustainable wealth through agricultural real estate? Then look no further than Agro Nosotros. They're a sustainable specialty agriculture company with specialty coffee farming operations in Panama and fine flavor organic chocolate operations in Belize. Over the last 4 years, they've helped ordinary people to diversify outside of traditional real estate and into offshore agricultural real estate. They don't have your typical tenants, termites, and troubles. Their tenants are trees, and they grow and produce 2 hugely popular and proven products, coffee and chocolate. Through Agro Nosotros, you can own half-acre parcels in your very own specialty coffee or organic cacao farm, turnkey managed on your behalf, that produce passive cash flow for you and your heirs. And you can feel good about where you put your money to work. Agro Nosotros has socially sustainable programs that provide living wages, improved accommodations, and a steady channel to market to literally hundreds of farmers. And so far, they've placed 61 kids in school. To find out more and see how you can get involved, email agro@realestateguysradio.com. That's agro, A-G-R-O, @realestateguysradio.com.
Hey, I'm Jim Grant. I'm the editor and indeed the founder of Grant's Interest Rate Observer, and you, ladies and gentlemen, you lucky people, are listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Tell a friend about the Real Estate Guys and come on out to a live event, either one that we host or one where we appear, like the one here in Lancaster. All you have to do is go to the website at realestateguysradio.com and look under the button that says Events Before we get back to our interview with Dave Zook about self-storage, let's break for real estate trivia, your chance to win a prize by knowing today's real estate trivia question, which has something to do with the area of the country we're in today. As soon as you hear the question and think you know the answer, you're going to quickly send an email to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. You want to include your name, the answer to the question, and your physical mailing address. Because if you're the winner, we're going to send you a copy of this great book called The One Thing That Changed Everything. It's a collection of awesome stories by great people, including Dave Zook. Dave Zook is a contributing author to this book, and that can be yours if you know today's real estate trivia question. Last week, we asked this. There's a famous scene in the 1980 classic comedy The Blues Brothers where Jake and Elwood lead a police chase through a shopping mall. What mall was that? Well, the answer is the Dixie Square Mall in Harvey, Illinois, at the junction of 151st Street and the Dixie Highway. The mall's time as a retail center was short-lived. After opening in 1966, it closed just 13 years later. In fact, it stood vacant for 32 years, more than twice as long as it was in business. Both the inside and outside of the mall were used in the filming of the Blues Brothers, which solidified that mall's place in history. Here's our real estate trivia question for this week. The Lancaster Central Market is the nation's oldest continuously operating farmers market. When did it start? How long has the Lancaster Central Market been going on in Lancaster? It's the oldest farmers market in the U.S. When did it start? What year? If you know or just want to guess, send your best guess to trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address. And you can read Dave Zook's story and lots of other great stories in The One Thing That Changed Everything. That's today's real estate trivia question. We're in Lancaster with Dave Zook. It's your neck of the woods, man.
It is. You know, it's not that often that we get a group of guys. I mean, you're in town. Tim Gertz, my CPA Tim Gertz was here.
Yeah.
Kyle Wilson's here. Dana Samuelson, one of the foremost authorities on gold and silver. I mean, you'd think this was Dallas or something. You know, I mean, next thing, give us a couple of years, we might have our own NFL football team. Who knows?
Look at that. That's amazing. It's a beautiful place. You were gracious enough to invite me out a couple years back, and I only had a day, and was like, I've got to come back. Was able to bring the family. It's been extraordinary. And, as you look around, all areas of the country have different needs, different uses of real estate. But this idea of storage, we're talking self-storage today. Are there particular markets that make better sense than other markets? Are there places where you identify markets or types of markets that make sense for the kind of projects you're talking about?
Normally, we're in secondary and tertiary markets. Okay. So and we like Southeast. Most of our portfolio, almost all of our portfolio is in Southeast, heavy in Florida. We got some in this fund. We're in Tennessee, Alabama, Florida. That's where the growth is going. When you look at projected growth in the United States, it's the Southeast. Everything's pointing to the Southeast. So most of our business that we've done in self-storage has been in the Southeast.
And we think about the residential user, but there's other users too, right? There's folks that store documents. There's people that have growing businesses and they run out of space or in the middle of transition.
Students, military.
Yeah, there's a lot of uses for it. I think that when people think about self-storage, they're like, well, I don't know how I get involved. And I know you can find some small opportunities. What you do as a syndicator, though, is you always look for a team. And I know you've talked a lot about your team here, and we've talked over the years and seen some of the projections, and they've done a great job of meeting that, and the market's been strong. At what point does it make sense to make this decision you did, that rather than just do a property here and a property there, why would you make the decision to do it as a fund? What's the timing about that?
I think volume was one. I mean, you got, in the pipeline for the rest of the year, you got 8 to 10 deals that you're doing. I mean, that's more than one a month.
Yeah.
And so just ease. I mean, it's a little bit like buying a 60 unit apartment buildings or buying one 300 unit apartment building.
Yeah.
I mean, it just, you got the scale. You're doing one set of subscription docs. You're doing one deal and just consolidating. It's just a lot easier. And for the investor, you're getting into a fund where you've got a good healthy mix of stabilized assets and some value add assets. So you're getting a little bit of both.
If you've driven around, you've seen self-storage. I mean, there's some major brands that are franchises where people can affiliate. In this case, what you have is a team that knows this space, and they look for not the major branded property, but the individual owner. Is there a key indicator when an owner of a self-storage unit becomes a don't-wanter and wants to sell to a fund like yours?
I'll just give you an example. One of the assets in the fund is from a 75-year-old man who is ready to retire. He's owned this asset for, I believe, 15 or 20 years. He's never once raised rents on a tenant who's come in. So if you're a tenant that came in 15 years ago, your rent is the same today as it was 15 years ago. So when we get into an asset like that, that smells like opportunity.
Yeah.
Will we lose some tenants when we bring the rents up to market? Of course.
I'm guessing.
But, your REITs, when they look at an asset, they're looking at physical occupancy. They want to see 85, 90% occupancy. We're much more concerned about, are we getting the revenues per unit that we should be getting? Are we driving the revenue? Because if we drive the revenue, we're helping our investors and we're meeting our projections.
So when an investor looks at the fund, you're going to have assets that are producing income from basically day one. Then you're going to probably have some CapEx, some expenditures to add units and so forth. What does that whole mix look like, and what kind of returns are you projecting?
In this fund, because there's some value add in the fund, we're looking to make a distribution in the fourth quarter, and that's projected to be at right around 4%. Again, we got some stabilized assets and we got some value add assets. That return climbs over the course of the next 6 years, obviously, 4 to 6%, then 7%, then 8%, then 10%. So, modest cash flow on the front side. But historically, if you watch this team, their real pop comes in the back end. When you can buy an asset at a 6.5 cap, you can add a lot of value to the asset. You can get that asset stabilized and then sell it at a 4.5. That's where you get your pop on the back end. So if you're looking for double-digit cash flow returns, out of the gates, this is not the right deal.
Right.
If you're looking to team up with a group who's, hit IRRs in the 40s, in the 40% range.
Yeah.
I mean, it's been crazy, the numbers they've been able to hit, but they've got good relationships with the REITs and they've been able to sell at a really low cap rate.
Now let's talk about the tax side. If people have heard you on the show before, a big part of your story is that you weren't attracted to real estate for the returns. You had a tax problem. You've mentioned your family businesses and you've been a successful business guy and your family's amazing and you've got the big tax bill and you discovered, real estate is a great way to get your tax down. So how does the tax part work here? What type of, deductions and things could the investors expect in a fund situation?
Yeah, so as with any individual property, the tax benefit is going to flow right through to the investors on their K1.
Yep.
One thing that does happen in this asset class, you're moving out of the residential asset class, a 27.5-year depreciation schedule, and you're going into a full commercial real estate that's 39-year depreciation schedule. But it depends on what the plan is with the property. If you can stabilize it and sell it to a REIT in 2 to 3 years, it may not make sense to do a cost seg study.
Right.
If you're going to hold it for 5 years and refi it and hold it for another 5 years after the refi and hold on to it for 10 years, then absolutely a cost segregation study would make sense. So we look at individual properties and figure out, okay, how do we best serve our investors? How do we get the tax benefits from this? And each one could be different.
Awesome. Hey, before we're done, I know you've freshened up your report on self-storage and reasons it makes sense. So we'll tell you how to get a hold of that. And then you'll be able to reach out to Dave if this sounds like an investment asset you might be interested in. But let's talk about the philosophy of this, because you're not a guy that is out there checking in and leasing new spaces and selling boxes. You're a hands-off operator and you always find teams to affiliate with. And this is a mindset to get people familiar with. A lot of real estate investors are very hands-on. They buy a house, they go to the hardware store, they get paint, they measure, they take this is not that. This is a very passive investment. But the team is critical. We talk a lot about you got to vet the horse, the project, but also the jockey, the person or people running the project. So I know over the years, as you've been looking for great partners, these folks were referred to you, which is a good start, meaning someone who believes in them says, hey, these guys are legit. Then you had to go through the process, and now you've been through several deals. What are the highlights that make this team click?
This is you're investing in an operating business. So probably I would venture to say 50% of the success of this asset class is based on the operator, the management team.
Yeah.
So you're really betting on the management team here. And, one of the things I found interesting when I sat down with the principals was like, hey, what else do you do? Like, what else do you invest in? Do you invest in oil and gas? Do you invest in multifamily? And he looked at me and said, no, I've never invested in anything else. 35 years, all I've ever invested in is self-storage. So he's a hands-on operator, and he's eating his own cooking. I mean, he invested in self-storage exclusively for the last 35 years. This team has their 10,000 hours, and they're really good at what they do.
That is a great answer when you're looking for an operator. As an investor, you might think about diversity, you might think about other markets, and obviously you do that with your other investments. But when you have someone who's going to be in charge of the investment, you want to make sure it is something that they have done to the point where they are unconsciously competent. So good stuff. Now, people don't think about location so much with these kinds of properties because, like, well, I guess I'm going to go there once a month. But location's important in terms of markets. You talked about the region. What are the REITs looking for? Is it strictly return, or is there a reason that the secondary and tertiary markets make sense from that perspective, or just too much competition in the primary markets?
One of the things, the very first thing they don't want a value add property. They want something that's stabilized. They want something that they can look to and say, look, we're buying a stream of income. It's very similar to how we look at an ATM investment.
Yeah.
We're not buying an ATM for the ATM. We're buying the ATM because it's a vehicle to a cash flow stream and a tax benefit.
Yep.
So it's very much like that. REITs like a stabilized asset. Obviously, they like certain markets. If we may not be in downtown Atlanta. We may not be right in the hub, but we're outside. And if we can be just outside that, in the secondary or tertiary markets, that's where we want to be. And if you're in a stabilized market where they want to do business in, and you've got a really good stabilized asset, you're a target.
Well, and I think especially, I spent about a half a day with a bunch of REIT managers at the Money Show a few weeks back, hung out with Dana and Brian London and Peter Schiff at the event, and just getting your mind around what REITs' jobs are. They really are last in the food chain. They don't want to get involved with building and adding, typically. I mean, sometimes they do, but they want to take that asset that is as stabilized as it can be. And I would guess that certainly the market matters and certainly the product matters. But in this case, the track record matters. If these funds have bought from this group before, where else would they go? I mean, it makes sense to go right back to the well and say, what do you got?
Yeah, and that's a good point, because relationships matter to REITs too. It's not just relationships to individual investors. Relationships matter.
Yeah.
And so these guys have done a lot of business with them, and scale matters to them. We're doing this fund, 8 or 10 assets in this fund. Do you think a REIT might be interested in our, say 500 unit, 750 unit asset in Greenville, South Carolina? Yeah, maybe. Would they be more interested in 7, 8, or 10, 15 properties that you could lump up and sell them? Bigger. Size matters. Scale matters.
Absolutely. Good stuff. All right. Well, if you're interested in this and you'd like to learn more about just the whole marketplace of self-storage, or to find out how to invest with Dave, just send an email to selfstorage@realestateguysradio.com. Self-storage@realestateguysradio.com. And what's in the report?
The report is basically a general outline of self-storage, what it is, how it works, and then some, we've got some good stuff in there from professionals who've been in this space for decades. So it's just an outline of the industry, and then there's some goodies in there that you'll appreciate.
All right. Just send an email to selfstorage@realestateguysradio.com. Hey, we're excited that coming up in September, it's the Secrets of Successful Syndication, an event that you've attended many times. You're coming back on the faculty. Talk about that event.
That is an event that I haven't missed. I think I've been at the last 5 or 6 in a row, and the event is great. The speakers are great. The content is great, but I always love to get out there with folks who are either syndicators or aspiring syndicators. I mean, it's just a great group. So come on out, whether you're a wannabe syndicator, a seasoned syndicator, or a passive investor looking for deal flow. It's a great event.
I remember many years back celebrating the first $1 million you had raised as a syndicator. Now it's over $100 million. And what I love about this man is he's happy to share and talk and share resources and give ideas and just really adds to the event. So love to have you there. Looking forward to it. It's going to be awesome. Well, thanks for your time today. Always good to catch up. And if you're interested in self-storage, just send the email selfstorage@realestateguysradio.com. There's Dave Zook. Thanks, Dave.
All right. Thanks for having me back on the show.
You bet. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from July 5th to 8th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 13 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. 2018 was the biggest year in tourism Belize has ever witnessed, and this year is starting off strong. How does that translate to real estate investment? That's what you have to come see. There's all types of opportunity in Belize when it comes to real estate, including both long-term and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And at Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me July 5th through 8th in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so you can follow up with them after the trip if the market's interesting to you. But that ball's in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trips. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, July 5th through 8th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events. I look forward to seeing you in beautiful Belize.
Hi, this is Doug Casey, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Oh my gosh, always great to hear from Mr. David Zook.
Yeah, it's exciting to hear Dave and the way he's progressed. Even if you go back and listen to his interviews when he's been on the show before, just his comfort on being on the microphone and articulating himself, sharing the information. Of course, he's grown a lot too. Obviously, when you've done that many deals and you just got a lot of wisdom, you're able just to talk from a position of experience. And so it's really fun to see him develop. And then I think he said some things that were just really profound there that made a lot of sense. You know, when you think about the resistance, he talked about when the pain of change is not greater than the pain of staying the same. And that's a basic principle in sales. People won't change. And so you kind of bank on that a little bit when the expense of cleaning out your self-storage space and getting it moved and set up someplace else. I mean, you either got to dispose of everything, which takes a lot of time, or you got to go rent someplace else. So being able to move your prices up, you know, I've certainly experienced it myself, but I thought that was pretty profound. And then the other thing that really stood out to me that I thought was interesting was when he talked about occupancy. He talked about 100% occupancy, meaning your price is too low. And so while he was talking, I did the math. And it occurred to me that if you had, say, 1,000 units in your storage facility and you were charging, say, on average $100 a month, then that would generate $100,000 a month. If you were to drop it to 85% occupancy, your average rent would have to be just over $117. So as a percentage, you'd have to raise your rent by 17%. But in terms of an actual, dollars out of somebody's pocket to get them to move for $17 a month, am I really going to go rent a truck and spend a weekend digging through all my stuff and figuring out what to do with it? Probably not. I'm probably just going to pay the $117 and keep the party going. And so you may lose a little bit, but as long as you don't lose more than 15%, that $117 times 850 units is the same $100,000 you had when you were $100 at 1,000 units, if that makes sense. So I couldn't help myself. I had to do the math, and it penciled.
Of course. Well, and of course, that leaves you that 15% to rent again at the higher rate. Now, just like every real estate asset, rates and occupancy change over time. And so one of the things I appreciate about what Dave's doing with this new fund is spreading that over a bunch of different properties in different marketplaces. And of course, every market has different realities as far as what's happening with the folks that are needing these kinds of spaces. So, there's lots of ways to play in self-storage. You can figure out how to do it on your own. If you have a property and you want to develop some of this stuff, one of the easier things to build is self-storage, especially if you're in an area of the country where you don't need to worry about the climate controlled aspect, and there's lots of those places. Or you may decide, no, I think I want to put together a big old install or go and buy one of these units myself. Or maybe the easiest thing is to come alongside a guy like Dave and just be part of this. But I think it's an interesting niche because it's not as drama laden as investment property in the residential space can be. You don't have to worry about the big long vacancy and the hold times and all those things that you often have in commercial real estate. You don't have to worry about as much about the weather and things like that like you do in agricultural real estate. But of course, your mission as a real estate investor is just to take a look at all the things that are available and decide what makes sense to you. If you want to learn more specifically about self-storage, all you need to do is send an email to selfstorage@realestateguysradio.com. You'll get Dave's report about that. If you read it before, he's kind of spruced it up a little bit, and it'll also give you his contact information. So if it sounds like something you would like to find out more, also Dave's just a really great guy to connect with. Super happy he's going to be coming out to the Secrets of a Successful Syndication in September. He tries to come to that whenever his schedule allows, and he doesn't just pop in, speak, and leave. Quite the contrary. To get Dave up on stage took a little while because he's one of these guys that's just really great at the business side of what he does, and he aligns himself with excellent teams. But he's, doesn't have a podcast. He's not out on the speaking circuit. But from time to time, people do ask him to share like we have, and it's just been great to watch him blossom, one, as an investor, but also as a speaker. At this event, Dave took the stage 2 different times for an hour each, and he was interactive with the audience. He was funny, but at the end of the day, what makes him great is he's authentic and he's real.
Yeah, I think the other thing is he's inspiring. If you're out there and you're sitting there thinking, well, gee, $100 million, could I ever do that? Well, he started right where you're sitting. I mean, he started out in the audience listening and came to the seminar and learned, and then he did, which is important because learning is interesting, but doing is where all the action is. And of course, that's where the great learning is anyway. But, he put it into action. And the fact that he has now got to a place in life where he's had tremendous success and he's giving back. I mean, as teachers, and that's part of what we do. It's not the only thing we do, but it's part of what we do. It's really gratifying to see a student who is willing to come back and share. And to your point, Robert, he does. He hangs out, he talks, and he encourages, because there were points, when it got rough where he was like, I'm not sure I want to do this. I don't need to do this. But he kept going. And so he's inspirational in addition to being very knowledgeable. Of course, he knows his market, he knows his niches, and he knows how to get things done. Dave was somebody who was able to start relatively small and scale up pretty fast. And I think that's a unique skill set too, because a lot of people can figure out how to start, but they can't figure out how to grow or get big. But Dave was able to do that without losing the human touch. So there's a lot to be learned from Dave Zook, and there's a lot of cash flow to be made from self-storage. So when you can put those two together, that's probably a pretty good investment of time. And
if you're not already signed up, you can come out to the Secrets of Successful Syndication at the end of September. It happens in Dallas, Texas. You get all the details on the website at realestateguysradio.com under events. A big thanks to Dave Zook for sharing his time and his big brain with us today, and also for the great job he did at the event, hosted by our great friends Jerry Horst and Michael Menthe. Huge thanks to them for being such amazing host and treating us so well this week. And to all the listeners who came up and said hi from Lancaster, that was awesome. Great to see you guys. Next week, we've got a program that you're going to dig. We've been talking for the last several months about opportunity zones. We're going to look at a specific case study of an active deal in an opportunity zone that's going to blow your mind. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys radio show.